And in our top business story, the National Bank of Abu Dhabi, the biggest bank by assets in the Emirate, and FGB have separately invited shareholders to a General Assembly on December 7 to approve their merger. NBAD and FGB said in July that their boards had unanimously voted to recommend to their shareholders a merger of the two Abu Dhabi-listed banks in what would create a lender with 175 billion US dollars in assets, the largest in the Middle East. The banks are proposing that the deal be done through a share swap in which FGB shareholders will receive 1.254 NBAD shares for each FGB share. That gives FGB shareholders a 3.9% discount based on the closing share prices on June 30th. Under the proposed terms, FGB shareholders would own about 52% of the combined bank and NBAD shareholders the balance. It would leave the government of Abu Dhabi and related entities with a 37% interest in the bank. Shares of FGB would be delisted and the merger bank would be called National Bank of Abu Dhabi. Even though NBAD, the biggest bank by assets in the Emirate, has made headway in building its consumer banking business in recent years, it would get a boost from joining forces with FGB, which has more loans to individuals on its books. Mashreq's net profit plunged 25% in the third quarter as the bank became the latest to suffer from rising impairments. The fourth largest bank in Dubai, in terms of assets, announced a net profit of 414.95 million dirhams for the 3 months to the end of September, compared with 551.44 million dirhams for the same period last year. Impairments for bad loans rose 82% year-on-year to 470.09 million dirhams during the third quarter, as the bank's non-performing loans to gross loans ratio rose to 3.6% from 2.9% last year. The increase in impairment charges largely negated a 4.1% increase in net interest income and income from Islamic products for the quarter, and a 3.7% rise in operating expenses. Mashreq's chief executive, Abdul Aziz Al Ghurair, was quoted in a local report saying that he remains confident we are going to finish 2016 on a relatively strong note and will be well poised and ready to take advantage of the multiple growth opportunities in 2017. Mashreq shares listed on the Dubai Stock Exchange have lost 20.7% of their value so far this year, against a 6.4% gain by Dubai's headline index. Mashreq shares were suspended from trading on Sunday. Statistical analysis and data mining have topped a list of the skills most sought after by UAE employers, according to an analysis by LinkedIn. The professional networking website's annual top skills of 2016 list revealed that statistical analysis and data mining topped the list for the second year running, and that 6 of the 10 most sought after skills were in IT, showing that technology skills are becoming a firm requirement in the UAE job market. Public policy and international relations skills came second in the list, followed by algorithm, design, and architecture and development framework. 2 more IT skills featured in the top 10 list: middleware and integration software and user interface design, while renewable and sustainable energy mining and commodities and corporate law and governance ranked 8th, 9th, and 10th. LinkedIn Corporation said it developed the list by analyzing recruiting activity on LinkedIn since January. It said that as well as technology skills, public policy and governance skills were high on the list, demonstrating the importance the UAE places on judicial matters. While the addition of renewable energy to the list reflects the government's aims to increase the contribution of clean energy in the UAE.